So if you own your own business, it's important that you track all your revenue and all your expenses, not just for tax reasons, but also for yourself. It's just important to track that so that you can see the performance of the business. But of course, it is important for financial reporting for taxes as well. And so this might vary a little bit from jurisdiction to jurisdiction, but there are three main categories that you'll want to pay attention to when tracking business expenses. The first category would just be regular business expenses that are just treated as expenses. So things like, facility rental, insurance, costs for a website, costs for advertising, maybe purchasing business cards, supplies for your office, and things like that. So for those, you'll want to track them all. Where did you buy them from? How much did you pay? Taxes, how did you pay? And maybe tying them to a specific project. But you'll want to document all that and keep your receipts as well. Now, the second type of expense that you'll want to keep track of is expenses that are kind of shared between personal use and business use. So for some businesses, this will be a big thing. For other businesses, it will not be. But in my case, for example, I have a cell phone that I use for business and for personal. And then I have my personal vehicle that I also use in part for my business. So I want to make sure that I'm claiming my vehicle and phone expenses. And then I'm going to claim on my taxes a portion of those for business expenses, because I use my personal vehicle for the most part for personal use, but a percentage of the usage of the vehicle is for business. So I can at least claim a percentage of my expenses on my taxes. And so again, this is going to vary from business to business and maybe even jurisdiction to jurisdiction. So this is just for general educational purposes. But for example, if I'm driving to meet clients a couple days a week, or go to business meetings or business events, and let's say 10 or 20% of the usage of my vehicle is for business use, then at least where I live, I can claim 20% of my gas, 20% of my insurance, 20% of maintenance and car washes and things like that as business expenses. And then the same thing for phone. If you have a phone that's fully dedicated to your business, then that typically should be a full business expense. Whereas if you have a phone that's used for personal and business, then chances are you can at least claim part of that on your taxes because it is a split use. And the last category is expenses or purchases of assets. And these are treated a little bit differently. So think, for example, if you own a photography business and you purchase a new camera, the camera costs you, $3,000 or $4,000. So yes, that is a business expenditure, it's an expense, but for accounting purposes and tax purposes, that's typically treated a little bit different. Rather than just being a regular expense like, paying your monthly rent, it's treated as a capitalized asset. And as a capitalized asset, what you do is you have depreciation expenses over time, each year for that particular asset. And now this will vary a little bit, as I mentioned, jurisdiction to jurisdiction, business to business. Maybe there's a threshold where, expense under $500 is just considered an expense. It's not a capitalized asset. And anything above that price could be considered a capitalized asset, assuming it meets some other criteria. And I've actually made another video on that you can find on my channel where I break that down. But for example, if you buy that camera, that lasts for a long time, has a long lifespan, maybe it's above that threshold of $500. It's used for business use and it's a physical asset. So in an example like that, typically that would be classified as a capitalized asset, and then you don't have business expenses for it. You have depreciation expenses over time. And those depreciation expenses are basically just showing that the value of the asset is declining over time. So you can claim that kind of as a value loss as an expense for your business. So it's important that you track all of those things and properly record and report them. And I would recommend working with an accountant for that type of stuff because it can get complicated. It can be pretty nuanced. So, between expenses that are shared, business and personal, and capitalized assets, you'll probably want some assistance with that unless you yourself are an accountant. But the most important thing, of course, is that you are tracking all those things, because if you're not tracking them, then it's going to be hard to claim them. Or if you do claim them and you don't have the receipts and proof, if you ever get audited, then you might not be able to you fully claim those expenses. So hopefully that was helpful. You can like the video if it was, and subscribe to my channel for other content based on business management and business startups. And if you want to find a full list of eligible business expenses that you can claim, I can leave a link in the video description below. And if you have any questions, feel free to leave a comment in the comment section and I'll respond to it there.